Hey guys, I'm Patrick Zimmerman. Welcome back to the channel. We're going to be talking about 5 exchange-traded funds, commonly referred to as ETFs, which you can invest in your retirement account to help you get a higher annual return on your money. Yesterday we talked about the 4 different retirement accounts, 401ks, IRAs, as well as their Roth counterparts. If you haven't seen that video, I recommend you go check it out. The retirement account is really just a shell which dictates how the assets in it are taxed. If you'd like, you can just deposit cash into your retirement account, but this is not recommended as there are other strategies which can earn you much higher returns year over year.
Skies are clearing up.
The first thing we're going to talk about today is what is an exchange-traded fund or an ETF. ETFs are investment funds which are traded on the stock market. They're traded almost exactly like stocks. There are multiple different types of exchange-traded funds, and they can hold a variety of different assets, including stocks, bonds, and different commodities such as gold. We're going to talk about a real estate ETF today. When you're researching your ETFs and you're trying to decide which one to choose, you want to look at 3 different things. You want to look at the expense ratio. This is pretty much the fee that you're paying on the account annually. The reason that we choose to invest in ETFs instead of mutual funds is because they often have lower expense ratios as they are passively managed. When you invest in an ETF, you're not paying someone to sit behind a computer all day and trade the stocks which the fund holds. It's a lot more passive than that. You also want to look at the top 10 holdings. In most cases, the top 10 holdings make up a significant portion of the fund, upwards of 30%. The way that these top 10 holdings are being traded will definitely factor into the price fluctuations of the ETF itself. You also want to look at the diversification by sector. The reason this strategy involves investing in 5 different ETFs is because it's going to give you a wide range of diversification, not only between sector, but between country and also between the different types of assets which you'll be investing in. So the first ETF that we're going to be talking about today is the Vanguard Mega Growth ETF, stock ticker MGK. This is a large cap fund, so it's mainly blue chip companies, huge companies with very large valuations. Here is the 1-year chart. You can see that the fund is currently trading around $180. The top 5 holdings are Microsoft, Apple, Amazon, Google, and Facebook. Additionally, this fund is 46% diversified in the technology sector, which is one of the strongest sectors right now, offering incredibly high returns. Most of the stock picks we're going to be looking at today are Vanguard funds because Vanguard does a really good job at keeping extremely low expense ratios. The expense ratio on this fund is 0.07%. It wouldn't be unheard of to buy into an ETF with an expense ratio of 0.3. That's not too high. I would try to keep it under 0.6 if you could. The lower that expense ratio, the less fees you're going to have to pay on the money which you have invested in the fund, which is going to help increase your buying power over time. The next ETF we're going to talk about today is Vanguard FTSE All World ex-US ETF, stock ticker VEU. This is the international ETF which I suggest you invest in. In the name, it specifies that it is an ex-US ETF. This means that none of its holdings are US companies. Here's the 1-year chart, currently trading just above $50. And you can see the top 3 holdings here are Alibaba, Tencent, and Nestle SA. Alibaba is a great holding. It's very similar to Amazon, but it's a Chinese company. I like to allocate 25% of my investments into the international ETFs because it really helps give you that additional diversification within your portfolio. You can see here by region, 24% of it's invested in emerging markets. These are smaller markets like Hong Kong. 40% is in Europe, and only 5% comes from North America. Additionally, the expense ratio here is very low, under 0.1% at 0.08. The third ETF we'll be talking about today is our small cap choice. These are smaller companies with lower valuations. Small cap companies are advantageous to invest in because they offer much higher upside and potential growth in the future. This is the only fund we're talking about which is not a Vanguard fund. It is the Schwab US Small Cap ETF, stock ticker SCHA. Here's the chart, and the stock is currently trading just above $70. Here are the top 10 holdings. You can see number 3 down is Etsy. Etsy is an e-commerce site. If you've been paying attention to the economy lately, we're seeing this massive shift, especially as a result from the coronavirus, from brick and mortar stores to online shopping, similarly to Amazon, Alibaba, and now Etsy here. I like Etsy being in this group of holdings because compared to the before mentioned Amazon and Alibaba, it is really a much smaller company. You can see the market value is only 58 million, and it has unlimited room for growth in the future. Another reason we're talking about this small cap fund is because the diversification by sector is much more spread out than the large cap fund was. You can see that only 16% of the portfolio is invested into the technology sector, with the largest holdings in healthcare and financials. The expense ratio here is also 0.04, which will help you retain as much buying power as you can. The next ETF we'll be discussing is a little bit different from the first three. Instead of holding stocks, this one holds long-term bonds. It is the Vanguard Long-Term Bond ETF, stock ticker BLV. As of today, we are currently trading at about $117. And you can actually see on the chart here that we have already surpassed that pre-corona high. Another reason this is my favorite long-term bond ETF is because almost half of these bonds were taken out against the US government. And the expense ratio here, right up Vanguard's alley, 0.05%. The last ETF we'll be talking about today is the Vanguard Real Estate ETF, stock ticker VNQ. VNQ is currently trading at about $80. Despite the state of the economy right now, I think this is a good buy if you're going to hold long term. It's trading at about a 20% discount from that pre-corona crash. Here are the top 10 holdings for Vanguard's Real Estate ETF. If you'd like to look more into some of these, I would encourage you to do so. And the expense ratio is the highest on our list today at 0.12. Although that's the highest, this is still an incredibly low expense ratio and should be a reason to look at Vanguard's ETFs in the future. The last thing I want to talk about today is how to properly diversify your holdings within each ETF. So I have the fund type over here. We have large cap, international, small cap, long bond, and real estate. And here are the percentages which I have listed. You can obviously tweak these a little bit if you'd like. I considered dropping down the international to 12.5 and bringing up the real estate to 25%. Real estate is really a great way to grow your money and get the best return you can. Thank you all for coming to the video today. Just a quick recap. You should be investing in multiple different ETFs. I wanted to talk about this strategy first because it's a little more passive than the one we'll be talking about tomorrow, which includes buying specific stocks rather than funds which contain hundreds or thousands of stocks. The reason the funds are a good idea for a retirement account is because you're not going to have to be checking your account once a month to see how said business you're invested in is doing. Instead, you can maybe check it every 6 months or every fiscal quarter. But because each ETF has such a high number of holdings within it, it's going to be much more difficult for that price to crash. If a handful of companies within the fund aren't doing too well, but the top 10 holdings are still flourishing, then the price is still going to rise regardless. Check back in tomorrow for another investment strategy if you were more interested in choosing single stocks for yourself. This is what I do. It's a little bit more fun and in-depth to me. Don't forget to like the video and subscribe to the channel. Leave a comment down below letting me know about your favorite exchange-traded funds. I would love to look into them and maybe make a video on them in the future. I'm Patrick Zimmerman. It's been a pleasure, and have a nice day.